Yeah, and what do you think? Does that put a nail in the coffin for further rate rises? Do you think the RBA will be happy to see inflation moderating at current interest rates, or they won't feel the need to raise them again? I read that the RBA expects inflation to fall to 3.5% by the end of the year and below 3% by the end of next year. So what do you think the RBA is thinking at this present moment?
Well, I think the RBA would be feeling quite happy at present. Going into Christmas, they were still warning that they may have to raise rates again. They'd made that tightening bias, if you want to call it that, dependent on the economic data. But the economic data, particularly in regards to inflation, is going in the right direction. I think these numbers are probably below what they were expecting. They were forecasting 4.5% inflation for the end of last year. Looks like we're coming in well below that. And likewise, their forecast for 3.5% inflation this year, and then not reaching 3% till the end of 2025, they look a little bit bit on the high side. So I think when we see their revised forecast come the February meeting, that they will have actually revised down their inflation forecasts. So consequently, they won't feel the need to raise rates again. They'll probably still remain cautious. They'll probably warn they may have to do more. There are issues still out there with services. Insurance is a big one, and of course there's ongoing upwards pressure on rents. Electricity prices are still an issue, but against that there's lots of areas in the economy where we're starting to see weakness in terms of prices. So I think that's consistent with the RBA leaving rates on hold and starting to cut rates probably in June.
Just breaking down the numbers a little further, a lot of the inflation came from housing costs, but falling oil and fuel prices contributed to a lot of that reduction in the CPI figure. And interestingly, electricity prices rose 8.8% since June 2023, and excluding the rebates such as the Energy Bill Relief Fund, electricity prices would have increased 19% over that period. So that gives some interesting insight, doesn't it?
It certainly does. It does tell us that the Energy Bill Rebate or Relief, as it was called, has helped in keeping inflation down, keep down costs for those who are eligible for that support. So that's worked. Likewise with rents. Rents are going up. I think 7% would have been a faster increase were it not for rental subsidies to some renters. So those things are certainly helping. Childcare is another one where subsidies have helped keep childcare costs down. So those things are helping to lower inflation. I know there's a concern amongst economists that when you pump subsidies into the economy, it's effectively a fiscal stimulus. But I think the more important point is to help get those inflation numbers down. And that's what those stimulus measures or those support measures have been helping to do. And so that's working. But even beyond that, of course, those increases are still very high. You're still seeing strong growth in rents and electricity. But beyond that, we are seeing weakness come through an area like clothing and household equipment. And when you allow for the fact that Australians are now very focused on keeping their shopping focused on where they can get a discount, Black Friday sales, for example, it's likely we're going to see more weakness there. And I don't think we yet see the full effect in these inflation numbers from the Black Friday discounts. So there's probably more downside to come. In fact, once the very high inflation numbers that we saw at the end of December last year drop out of the annual calculations, we're likely to see annual inflation for the year ended December last year drop down to around 3.5%, possibly 3.3%. So there's more downside to come as the very high numbers a year ago drop out.
Shane Oliver, thanks for breaking down the figures for us this morning.
My pleasure. Thank you.